One stock just cracked today's top 5 for July 9th. NVDA. Nvidia just shed $1 trillion in market cap. That's the headline everyone's talking about. But here's the thing. $1 trillion loss doesn't mean Nvidia is broken. It means the market is repricing where artificial intelligence money flows. Today Nvidia bounced plus 3.65%, and our verdict says watch the upside. But here's the catch. Conviction is LOW. So what does that mean for you as an investor? It means there's a setup worth monitoring, but don't go all in. Let's break down exactly why Nvidia is interesting right now, and more importantly, where the edges are. $204.12 today, up 3.65%. But here's what matters. The volume is 0.92 times average, which means not a lot of money is pushing this stock higher. That's the red flag. A big move on weak volume often doesn't stick. So don't confuse today's bounce with conviction. The real insight is the bigger picture. Nvidia is 13.7% below its 52-week high, which puts it into accumulation territory for large buyers. The entry zone we're watching is $199 to $204, and you're literally in that zone right now at $204. Stop loss sits at $189, which gives you a 7.4% cushion before you're wrong. If Nvidia closes above resistance at $213.99, that changes the narrative from pullback bounce to trend confirmation. Until then, you're speculating. The RSI is sitting at 50.98. That's dead neutral, right in the middle of the meter. So Nvidia is neither overbought nor oversold, which actually tells you something important. There's room to run in either direction. The moving averages tell a cleaner story. The 200-day MA is at $191.39, below current price, which is bullish. The 50-day MA is at $209.52, above current price, which means price has to reclaim that level to confirm a real bounce. Right now you're trapped in between the two moving averages, which is no man's land on a chart. Break above $209.52, and you get a clean trend signal. Stay below it, and you're just noise. Here's what we don't know. There's no earnings data in the pipeline, so no near-term event risk that we can quantify. That's actually good. No earnings surprise to blow you out, but the elephant in the room is obvious. Nvidia shed $1 trillion in market cap, and the question is whether that's a healthy rotation out of mega-cap AI plays into other sectors, or whether it's the beginning of a crack in the AI narrative itself. The news we're reading suggests it's rotation, not correction, meaning Nvidia's fundamentals are fine, but capital is shopping elsewhere for now. If that's true, Nvidia becomes a quiet accumulation play. If you're wrong about the narrative, the downside is real, all the way to support at $189.80. The put-to-call ratio is 0.404. That means for every dollar bet on Nvidia falling, $2.47 is bet on it rising. That's very bullish positioning. Institutional traders and options flow are saying the smart money expects upside. When you see a put-to-call ratio this low, it tells you that put options are cheap relative to calls. So if you think Nvidia bounces, buying calls here is unusually good value. But here's the catch. We don't have implied volatility data, so we can't confirm whether options are actually cheap on an absolute basis or just cheap relative to recent history. What we can say is that the directional bet from options traders is firmly on the upside. Verdict: watch the upside, direction up, conviction LOW, and that last word is key. Low conviction means don't size this position like a home run bet. Entry zone is $199 $204, where the stock trades now. Stop loss is $189, costing you 7.4% if wrong. 3 targets: $213.99 immediate resistance, $215.48, and $294 longer term. Here's the R:R math. Risking 7.4% to make 4.8% on the first target equals 0.65 reward to risk. Mediocre, not great, not terrible. The action is simple. If Nvidia closes above $213.99 with volume higher than today's week 0.92 times, you have a real setup. Until then, watch and wait for confirmation. So here's what you walk away with. Nvidia is on the radar. The bounce is worth watching, but the $1 trillion market cap loss means the tape is fragile. Low conviction means you size small and use your stops tight. The chart is pointing up. The RSI is neutral. Options traders are bullish. Put-to-call is screaming upside, but volume is weak and the move hasn't broken the key levels yet. Watch for the move above $213.99. That's your confirmation. Until then, you're speculating, not investing.